What else do you have to do? You gotta just start investing. Welcome to the $1 Million Challenge. So in today's video, I'm going to give you guys a brief update as to what's been going on with the portfolio. Now, recently, I went through a bunch of sales, and what I'm trying to do with this portfolio is to trim down the fat and hone in on extremely good companies and ETFs. I have a lot of old holdings in this portfolio, and my goal is to grow. We started portfolio in 2019 with $3,000 and consistent contribution over time, right? And currently it's $77,000 that we have in there with a cash flow that I've put in of $72,000. The portfolio has generated almost $5,000 in growth so far and $1,000 in gains. Now, I've played around with this portfolio a lot, so that's why the gains is not much. So now I'm getting to the point where I'm not gonna be adding much companies. My goal is to the companies that I have in here, my goal is just to grow them over time. Now, I recently did some videos, and I told you guys in that video that I was going to be selling some stock because the S&P has been very high lately. So some of the changes that I made was the allocations here. All right, so what I've done was I realized over time I have not invested into Amazon a lot, and Amazon is becoming part of the economy on a very big scale. I have to up it more into Amazon. So what I did was I moved the percentage from 2.4%, I moved it to 25%. And then same thing with Netflix is one of the ones that thinking about this, right? Microsoft, a lot of these companies are like companies that I've watched mature to this point. And I think with the AI boom and all this stuff, it's going to help them get to the trillions of dollars. So I'm going to be investing into these companies with pretty much every dividend that I get. I'll be reinvesting those into the tech sector here, and I'll be deploying them here. Now, we're going to put Amazon at the top of the list at 25%, and 20% go to Netflix, 10% go to Microsoft, Apple. I would reduce it to probably about 5%. Then I'm going to increase this and make this maybe like 10% or 9% or so. Or 9% or so for SPHG. Now, I also recently added the other Google, so we can have 6%, and then we're going to be putting money into that too over time. So here is what my tech sector look like, and what I'm doing is I'm selling a few things. I'm selling Sharp. Sharp is a good company. Probably over time they're going to do very well. So if we check Sharp here, right, and we look at some of this data right here, right, I like to start here first, look at the balance. They have about $5 billion, over $5 billion in cash, just under $1 billion in debt. That brings the total cash up to 4.2 billion. So this is a company that actually has money in the bank. Like, they have money in the bank. Their operating margins and all that stuff is not really so big. I like to see something 10%. Well, for a software company, it's not really so large. But anyways, if we look at all their other stuff, right, the revenue has steadily grown up over time. They don't really get to keep much earnings though. Let's see, cash flow, they went down last year. It's gone up this previous year. So their stuff is still a little bit choppy. They never really used to run with a lot of debt, but took up some debt. The income went up quite big. That income is dropping off a little bit, but if that debt too is dropping off accordingly, and it will make a bit more sense, but its debt is kind of holding steady, right? So if we let's look at the cash and debt, right? The cash that they have is very high compared to the debt, but I don't know what it is that is making their stock drop this much. I mean, it's down 22% this year. It's down a lot. So let's look at 5 years. It used to be up a lot more, dropped significantly, went up, and it's showing a big sign of dropping again. 10 years pretty much has gone down in 10 years, and all times has pretty much gone down. So I don't know if people are, maybe some competition is coming to their business or anything like that. But for me, I would just rather get out now. And that's what I'm doing with the portfolio here, right? Selling out a shop, and I'm going to take a little loss of about 50 cents, but that's okay. I'm going to sell out a shop and put that money into S&P Global. I think the money from Sharp will be very well invested in the very capable hands of S&P Global. So the other thing I'm also doing is I'm selling out of Cisco, right? Pretty much for the same reason. I'm selling out of Cisco and putting that money into Google right here, putting that money into this one. So that way we have something going on for those two. And for my tech section in general, I've just reallocated some of this: Amazon, Netflix, Microsoft, Apple. So over time, Amazon will be one of my top holdings in the tech sector. So that's what I'm looking to do. I'm reducing Apple a lot because they are having a lot of issue with regulations. Their technology is kind of a bit stale right now. They haven't come up with anything major in the past few years. So their technology is a bit stale. So I want to put money into Amazon because Amazon, I see Amazon as, a couple of $1 trillion. Netflix, definitely global entertainment. They are the undisputed champion right now. So I want to put money into them. As the more of the world come online, Netflix is going to benefit a lot from that. Microsoft is really benefiting a lot from AI. Everything that has to do with AI right now. Amazon too is a big winner on that because of cloud, right? Amazon has like the biggest cloud services in the world, so they're doing great on that. And S&P Global, they own the name S&P 500, right? So they do indices, they do market data, and like Google is doing, they have YouTube, they have Google search, they have all the stuff. So I think with this setup, it would help this section of the portfolio grow over time. All right, so the goal is to over time grow this account to be millions and millions of dollars. Now the passive income section of the portfolio has all of these components in it, and that needs to grow significantly. So that's what I'm planning on doing, and I'm gonna just be documenting and be showing you videos on how I'm doing that over time. So there's going to be one last thing I traditionally do on this channel. I like to go through from day and I show you like what dividend are coming in and stuff like that, all the way up to 1 year, right? So as you can see, day one, we didn't get anything. And this was May, the ending of May, we didn't get anything. And then in 1 month, we've got about $90 in dividend in 1 month. And we got, let's say 3 months, we got about $300 in dividend in 1 month. And if we look at year to date, roughly about almost $500, 463. And in 1 year, the portfolio has gotten about 1,700, almost 1,800 in dividend. Not counting how much the market has grown by. All right, you're just not getting paid dividend alone. The portfolio has grown by $10,000 in the past year. All right. Even though I took some money out, but it has still grown by $10,000, which is really awesome. So looking forward to putting more money in, because this balance here over time would roughly be about $20-30 million, and that is where I want it to be over time. And I'm going to be doing videos on this every single day. What I'm trying to do over time though is to not make too much changes, like allocation changes and stuff like that, and just put money in and share with you how those are doing over time. All right, so that is pretty much it for today's video. I appreciate you watching. Until next time, see you later. Love you all. Bye.